All right, a big move in the market this week, in the broader market that is, and I think it could be setting us up for a summer rally. I'm going to show you why that is. I'm going to show you what was behind it and a handy little tool on how to predict where interest rates are headed. I'm also going to do my normal market analysis and we're going to look at the trade of the week on IVP. But let's dive in to that question of, is there going to be a summer rally? And the reason the market got excited this week is there was a weak consumer price index number, and that basically indicated that inflation is low and therefore the likelihood of a interest rate drop is greater. Now what you see on screen here is a tool that's provided by the CME group, and it demonstrates or shows the market's prediction for an interest rate cut. Okay, so prior to this week's CPI number, the market didn't really expect a cut in interest rates until the fall, maybe even November. But with that weak CPI number, which means inflation a little less than expected, we saw those probabilities change. So if you do a Google search for CME interest rate predictor, you'll find this website. You can see the address up there for those of you that want to go look at this. It's a great little tool. And so what it shows here is the July meeting. So this is the July 31st meeting. The likelihood of an interest rate cut is 6.2%. Okay, the chance that it's going to stay the same, 93.8%. So there was a 6% chance, based on the market's opinion, that interest rates will drop a quarter point at the July meeting, which is coming up in a couple of weeks. But watch what happens when we jump to September. Now you see there is a 90% chance of the target rate dropping a quarter point, and actually a 6% chance that it gets dropped a half a point, and a 3.8% chance that it stays at the current level. So why is this important? Well, what we saw in recent months, almost years actually, is the high interest rate environment has been good for large cap tech stocks and bad for just about every other part of the market. And so we've seen stocks like NVDA and Microsoft and Amazon and Google do very well. They haven't been hurt by high interest rates. Meanwhile, the broader market has been rather weak. And so when we look here at this chart of the S&P 500, you can see that it's been moving up very nicely. In fact, I can make this a 3-year chart, and you can see just the great performance of the S&P. However, remember, as I discussed in a video earlier this week, that's because the S&P 500 and the NASDAQ 100 are market-weighted indexes, and they're really heavily influenced by the largest companies in the index. So right now, NVIDIA is the largest company in the stock market, and it therefore has the heaviest weight in the index, and it's done or helped pull the index higher. And then you have Apple and Microsoft and Tesla and other large cap tech stocks that have had a big influence in the weighting of the index. Okay, so now let's jump to a different chart. We're going to show you the the equal weighted version of the S&P 500. I'm going to make this a 3-year weekly chart. And you can see that while the normal S&P 500, the market weighted version, has been doing this really strong upward trend, the broader S&P, most of the stocks have really just been going sideways. But notice what happened last week. It broke to the upside from this pennant pattern. And because the trend into the pennant was up, that means it's likely that the trend out of the pennant will be up. But let's go back to the weekly chart of the market-weighted version of the S&P. Here you have the 3-year, and you can see that there's a little bit of weakness in the S&P 500 last week. If we go to a 3-year chart, doesn't really show them I'll show you the NASDAQ 100 in a moment. In fact, let's do that quickly. Here's QQQ, and we're going to go 3-year. And you can see that it didn't have the gains, it didn't have that breakout that we see in the RSP, which is the equal weighted version of the index. Now, what does this all mean? Essentially what it shows is that when that weak CPI number came out, the bond market predicted, or is giving the prediction, that interest rates are likely to be cut, not so much at the July meeting, only a 6% chance, but very likely in the September meeting, like a 90% chance. In fact, more than 90% because there's, a 6% chance that it'll get a half a interest rate point cut. So what happens then is there was some profit taking in those large cap tech stocks, and the money is flowing into the broader market. And I think that's where the opportunity is, because it's been 10 stocks that have really lifted the market higher, while 490 stocks in the S&P 500 collectively have kind of languished. I think what we're seeing now is a movement into that broader market, and that's going to make trading in the small cap stocks and just the general market overall going to be more buoyant, more bullish. And I think that that's where the opportunity is looking ahead in the near term, is the summer rally may come in that broader market. If you look at a chart of NVIDIA, and again, I did a video on this earlier this week, but NVIDIA has been a great leader in the market, but notice that it is gone parabolic. So the trend has gotten steeper and steeper. I did a video right here saying that it's likely that NVIDIA was getting hitting its top. And then this week we made a falling top on NVIDIA and now broke down on Thursday, and that indicates it's likely to pull back. Now that doesn't mean that there's going to be a sharp correction in NVIDIA and these other stocks. It could happen, but I don't think that's likely to happen. I think they're just stopping going up. The money's going to flow other places into the other part of the market. So let's just quickly go through our charts then. S&P 500, bullish trend, medium term, short term, long term, but I think you're going to see a rotation out of those large cap stocks, large cap tech stocks in particular, and into the broader market. On the NASDAQ 100, it's still in a bullish trend, whether you look at the short term or the long term, but it's starting to build this falling top again because the biggest companies in the index are starting to see some profit taking. If we go to the IWM, which is the small cap market, and I look at a 3-year chart here, this is where you see a strong bullish signal. There is a compression of volatility, which means that price is getting narrower and narrower in terms of how much it moves up and down. And then we got a break from that. So anytime you get a break to the upside from low volatility through resistance from optimism, it's likely to move higher. So let me walk you through that. Here's the optimism, rising bottoms. Here's the low volatility because we've come to the pointy tip of the pattern. And then we broke through resistance at this downward trend line with a strong abnormal price move to the upside. That should send the IWM up to the highs from 2021. So that's where I think we're going to see the summer rally. Let's take a look at the Canadian market. T.XIU is the symbol there. And we'll look at the 3-year first. There too, we saw this break of this pullback, and that should lead to a resumption of the upward trend. The Canadian market stalled at resistance at the old 2022 highs, and it's spent 3 or 4 months there and now breaking out, and it should continue higher in the weeks and months ahead. Let's take a look at the gold market, GLD. Look at the 3-year. It too looks like it's resuming the upward trend. If we go to the short term, you can see that after going sideways for most of the last month, Thursday and Friday, it broke out from optimism through resistance, and that should lead to higher prices for gold. How about oil? USO, let's go 1 month, has been trending up, but in the last week, week and a half, sort of sideways. So I think it's taking a little break. 3-year chart, the reason it's taking a break is because it's rallied to this resistance level at these old highs. And it's likely that we're going to get stuck here, maybe pull back a little bit in oil, hopefully hold this upward trend line. So I think it's very likely we'll pull back to that upward trend line, bounce, and eventually break out as the economy starts to improve. But for now, sort of a neutral to slightly bullish on oil. All right, let's take a look at our currencies. US dollar has fallen off this week because of expectations that interest rates are going to fall. That makes the US dollar a little less attractive. And so you've seen the drop there. You see the big drop on that weak CPI number. Interest rates drop, US dollar drops along with it. We're going to look at the bond market chart in just a moment. I also want to show you the Bitcoin chart, which has fallen out of favor a little bit. It was sideways for a few months and now starting to test this support zone. Hasn't really broken down through it yet, but we do have pessimism building, and it looks like we could break down through that floor price, and that would be negative, obviously, for Bitcoin. I'm not ready to say that it's in real trouble yet, but it is definitely flirting with it because we've broken that upward trend line from a little bit of a falling top. I'm starting to think Bitcoin more likely to go lower than higher, and watch that short-term chart for that breakthrough support that I showed. Last chart I want to show is TLT. This is our bond market chart. And you can see the bond market made some good gains this week. That means interest rates went down. If the bond market goes up, interest rates are going down. If we look at the 3-year chart, we're still not in a strong buy signal yet, but we're flirting with breaking that downward trend line from a rising bottom, which means we're breaking through resistance from optimism, and that should point to upward moving bond market, which means interest rates coming down. And of course, we've seen in the prediction tool from the CME that the futures, the bond market futures, are predicting that there's going to be a drop in rates probably in September, small chance in July, and let's see how that pans out. So my ratings then for the markets, US large cap stocks, NASDAQ, US small cap, Canadian stocks, I'm bullish on all of them, but I do think that we're going to see a rotation. So the gains in the S&P may be a little less, whereas in the RSP, which is the equal weighted version, probably see some gains there. And in the IWM, that small cap index, we're going to see some gains there. Gold, bullish on both time frames. Oil, short-term bullish, long-term neutral. US dollar, bearish in the short term, neutral in the long term. Bitcoin, bearish on both time frames. And bonds, neutral on both time frames. All right, let's get into this week's day trade of the week. And this is a stock that was behaving abnormally, actually in the last little while, but it perked up again on Friday. It was making gains. I love stocks that are making gains. They pull back and then they break their pullback. You can see my little action candle indicator right here. So we look for that as a sign that there's strong buying pressure coming in. Very short-term indicator when I apply it to a 1-minute chart, but we can apply this indicator to the weekly chart as well. And the bond or the IWM, the Russell 2000, made an action candle on the weekly time frame this week. Abnormal price action to the upside with good volume. Same basic pattern. It had a little pennant on the weekly chart, just like this stock is making a pennant on the 1-minute chart. And look what happened. It rose fairly nicely from $8.40 roughly to $12. So, 40% gain there in an hour and a half, 2 hours maybe. So that's the kind of trades we love to see. And you can apply that thinking, whether you're a day trader on the 1-minute chart, whether you're a swing trader on the 13 or 15-minute chart, or whether you're a long-term investor doing it off of the weekly chart of the market indexes. We're seeing those patterns repeat in different places, and you can learn more about that at my website, stockscores.com. Subscribe to the channel. Make sure you get updates. I'm uploading a few videos every week, and so if you're subscribed, you're going to get those alerts when I've uploaded a new video. And what are your thoughts? Do you think that interest rates are going to drop soon, July, September? You've seen the market's prediction. Do you agree with it? Love to see your comments on that. I'll leave it at that. I hope you've enjoyed the video, and if so, again, hit the like button. And as always, trade well.